It has been almost 1 month since Hurricane Ian made landfall in Florida as a hurricane category 4. But Florida is Florida strong and has always persevered after these types of events in the past and will rebuild again just like before. People will continue to move here and fall in love with Florida just like I have. But there are a lot of learnings and key insights we can take from this event to ensure we better protect ourselves and our homes. In this video, we will address those key learnings. We're going to talk about the home insurance market in detail as it affects all of us living here in Florida. And lastly, we're going to talk about mortgage rate predictions and loan options that can help make it easier to purchase a home, including for those of you that were affected by the hurricane. If you're new to my channel, my name is Katrin.pfitzenreiter. I'm a local real estate agent in the Sarasota County, Manatee County, and Pinellas County region. If you're looking to sell or purchase in the area, I would love to team up with you and help you. So let's get right into it. A lot of homes were destroyed in Florida due to the hurricane. So for example, the Fort Myers beach area is completely demolished and part of downtown Fort Myers as well. Seeing this video clip, you can probably understand how it would have been very dangerous to ride out a hurricane if you lived coastal. And so for the next hurricane, if the county government asks you to evacuate, just do so. Be safe and take care of yourself. What's going to sound somewhat counterintuitive is that a lot of the people that were displaced are going to want to stay in the area, at least close by in the Southwest Florida region, because they don't want to leave their friends behind, their family, and it's the place that they've lived in for a while. Change is hard. The housing market here in Florida was already running low on inventory with lots of demand for Florida living. And so I believe that when it comes to inventory, that's probably going to get a bit worse because a lot of the homes were demolished due to the hurricane, but demand for Florida living is still here. It's here to stay. And so when we look at prices, I do believe over the next few months it's going to fluctuate, especially as the interest rates are rising, but I do not believe that the prices are going to come crashing down. But I will say this.
The party is over.
For investors counting on major appreciation, that's just not going to happen anymore. This article from FloridaRealtors.org supports what I'm saying, and that is property prices usually rise after a disaster, in part because many impacted residents want to stay, but there's a potential wild card after Ian, and that is insurance costs. Everyone in Florida is in a flood zone, even if you're in the preferred X zones. For example, a lot of the places that flooded in Orlando and in Northport were actually in areas designated X. And unfortunately, many of those people that were affected by the flooding didn't have flood insurance, in part because they were in a zone X. And so they felt like they didn't need to have flood insurance. And this is really important for you to take note of. So there's a lot of flood maps that are circulating, but FEMA is rezoning, has issued preliminary new flood maps. This caused so much confusion right before Hurricane Ian made landfall. So here's what you do. Check with your county government to ensure that you're referring to the latest map, and then check your address to see what zone you're in. You might actually realize that your property may be changing flood zone designation, and if that is the case, that is super important that you know that, especially if you get to a point where you want to sell your property, because it can impact the price of your home. And now, if you're someone that is planning on purchasing a property, double check the address of the property using the new flood map. It could very well be that the home is still designated in an X zone, but will be redesignated as an AE zone to come. Homeowners insurance is a real pain point for us living here in Florida and for you guys thinking about buying here in Florida. The average cost is about $4,000 for a single family home, and it's about 3 times as high as the national average. About to get worse, probably much worse. The worst case scenario happened, so I can only imagine that our premiums are going to go up.
Yeah, and I'm not going to sugarcoat it, expect them to go up.
Do you have any idea how much you're expecting to go up? Is there any talk in your world?
I would say, we're hearing 50% increases, which is huge. I've seen 100% increases on some people coming in recently, and this is before the storm even hit. So we were already in trouble, and now that we had this catastrophic storm come through, we're in more trouble. You can expect to see carriers leaving the state again. We're going to have more and more carriers folding up after the storm. They have to see how much in damages, and that's all being assessed right now. So we don't have final figures. Estimated cost of damages is about $67 billion.
And so you must be working on a lot of claims right now.
A lot of claims coming in, a lot of roof damages, flooding everywhere, just all kinds of claims. Cars being washed away. You don't think, everybody always tends to think of their homes, but there's also boats and cars and things like that were also damaged during this storm that is also going to make car insurance go up. If you do have a claim, I recommend all my customers to call me first so we can review deductibles, because a lot of times your deductible might be more than what your actual claim is that you're putting in. I had people that maybe lost a few shingles off of their roof, but they had an $8,000 hurricane deductible. Well, it doesn't make sense to put in a claim then. Unfortunately, you're just going to have to pay for that out of pocket.
Do you feel that the insurance companies are doing a good job covering those that actually had coverage?
A lot of people complaining that their payouts aren't even going to cover the cost of putting a new roof on. And then we're having to go back and dispute the claims with the insurance carrier. I've seen some carriers just jump right in and immediately release funds. I'm seeing other carriers fighting to release any type of funds, even loss of use funds, when people have completely lost their homes and they have nowhere to go and they need to get a hotel, having problems getting that money released. It just is kind of a little upsetting to me being an insurance agent, because, here we help people get this coverage and we think we're helping them and it's going to help them in the time of need. And then at the time of need, when they go to put the claim in, the carrier's fighting with them. And a big one recently has been, this is a flood claim. This is not your homeowner's claim, and your homeowner's insurance will decline the claim if it is a flood claim. They do not have coverage for flood on there unless there's a special endorsement. Some carriers, homeowner carriers, do offer the endorsement now. I would say the majority of them don't, so you have to have that separate flood coverage. And there were people that it was a surge that took their home away and they did not have flood insurance. And unfortunately, that provides no coverage for them. They will have to go to federal assistance, government assistance, which is not going to be a lot.
How much do you expect it to be?
So I can only go off of what has happened previously. Some of the research I did on Hurricane Harvey in Texas, it just flooded that area so badly for days. A lot of the people did not have flood insurance there. They weren't in flood zones, so nobody carried it. And the average person who did have the flood insurance got a payout of about $100,000. The ones who did not, the government assistance equaled about $7,000. I tell everybody here in Florida, and I'm going to use myself as an example, I am not in a flood zone. We sit pretty high. I bought flood insurance last week, so I am going to have it. This storm was a huge awakening for myself and a lot of people around me. It doesn't have to necessarily be the surge that's going to come in and create the flood. It could be swelling of rivers and creeks and things like that. And we have a ton of rivers and creeks everywhere around here. So if any of that overflows, that can create flooding in your area. So it definitely does not need to be coming from the Gulf. It could just be 26 inches of rain drop on your city and start swelling the rivers. And we're seeing that with Orlando and everything from this hurricane. They got a lot of rain dumped on them and had a lot of flooding.
I'm just as scared as you are, and I'm thinking of getting flood insurance as well. Should I be thinking about getting it now to get better rates, or does it make more sense to wait maybe a few months prior to the next hurricane season in 2023?
I would recommend everyone to get it now. I mean, why wait? Because it could happen. It could just be one of our tropical storms that come through. It doesn't have to be a hurricane and it just dumps a bunch of water. That is the threat, is actually the water. Is not so much the wind. The rates don't really change. They are FEMA backed, so they kind of are standardized rates. If you go with the NFIP plan, which is the National Flood Insurance Program, those rates are set in stone per your zone. It's not going to change no matter which carrier you go to. That's an NFIP carrier. They're going to all be the same. Now, we do have private flood sectors that will quote, and they add a little more bells and whistles to the policies. They'll add maybe like a loss of use, pool refill, the dwelling aid coverage. On the NFIP, the maximum they're going to give you is $250,000. And you're like, well, I have a $500,000 home. That's only going to cover half of it. So the private flood sectors will cover you up to that $500,000 and more. A lot of times their rates are better than what's coming in with the NFIP. With the NFIP, it's a pretty much standardized. The rate is going to be what it is. The max coverage you can get is $250,000 and $100,000 on contents. If you go private sector, that's when prices can change and you can kind of make it more of an a la carte plan. There is a 30-day wait period. If you take it out today, you have to wait 30 days for it to be effective. And also the policies are non-refundable. The only way that they refund on flood policies is if you are selling the home. That is the only time that they will give you a refund. So if you're just taking the policy out just during storm season, unfortunately, they are annual policies. Typical annual policy is costing about $590 for an X zone. So it's not extremely expensive to get it.
A lot of homeowners insurance companies are pulling out or have pulled out of Florida. There's more and more people that are actually insuring via Citizen.
It is the government insurance plan, and a lot of times their rates are better than what is coming in with the admitted carriers. They also are admitted. The government sponsors them. They do, on their liability side, they're a little bit low. They'll only offer a maximum of $100,000. Your standard carriers are offering $300,000. So they're a little bit lower on liability as opposed to the coverages, your dwelling coverage, your deductibles, that type of thing. Same type of coverage that you're getting on any other policy. Just their underwriting questions are a little more lenient. They do have stipulations, so it doesn't mean that Citizens is just going to take everybody and anyone. I have seen them cancel policies, so it's not like they're just going to take a home that nobody is willing to insure. They make you get a 4-point inspection to get a policy with them. So they want to make sure your electrical, plumbing, air conditioning, water heater, all of that is up to par before they take the coverage. They will take people that maybe have older roofs, and then as long as you are able to prove that there's 2 years left of life on your roof, they'll accept it. If the 4-point inspection comes back and it says a year or no life left on the roof, they're going to decline it. So if you have that 20-year shingle roof, but it's still in excellent condition, Citizens is the route for you to go. And I'm hearing that they are financially stable. They think they are absolutely fine to cover the damages they need to cover.
What exactly is the difference between the coverage via flood insurance or homeowners insurance?
Your homeowner's insurance is going to cover hurricane. If your roof is ripped off and let's say rain is just coming in from the ceiling down, that should be going on your homeowner's insurance. If you have rising water coming up from the ground up to your home and it floods inside, so it has to be coming from the ground up into your home, that is going to be flood coverage. And that's when the homeowners start to decline. They're like, oh, it was coming from the street up into your house. That's a flood and needs to go on the flood insurance. Now, flood insurance is just going to do your dwelling and contents. They do not cover loss of use, things like that. If you need to go and stay somewhere else, there is no coverage for that type of thing. It's just a standard FEMA policy with contents and dwelling on it. If you want the bells and whistles, we need to go to the private sector to get all of that coverage for you, because your homeowners is not going to kick in the loss of use if it's flood coverage. Even though it's on your homeowner's policy, they're going to say the peril is flood and it needs to go on flood coverage.
There's a lot of discussions going on between these different types of insurance companies in terms of who's responsible for what.
Yeah, and I've had some claims decline saying that it was flood and it actually wasn't flood. So then you have to go back to the carrier. So there is a lot of back and forth arguments going on right now. There's a lot of people getting public adjusters, hiring attorneys.
Is there any suggestion you have for a homeowner in case there's another hurricane that comes our way, say sometime next year, and it's a bad one, and we have insurance? Is there anything we can do in terms of maybe taking pictures, just documenting what's happened to the house prior to the agents coming in to inspect?
I always tell people this, even not for a hurricane, it could be a fire or something that happens in your house and you lose everything. You want to go around and take pictures. Then it's on film, it's on camera. There's no stipulations to it. You have documentations of what you own and what you have in your house. If you forget to do that, let's say now, just to keep in your files, definitely do it right before a hurricane. Walk around, take pictures of your soffits and the outside of the house and the roof, and show how good it is. So when the storm does come through, they can't say, oh, that was already damaged prior to the storm, so we're not going to repair that. And you can show that it wasn't. I have heard some carriers not accepting the videos. They want actual just photos. When in doubt, just take pictures of every room and around the outside of your house as well. I also have been telling people after the storm hit, again, document.
It is getting more and more expensive to borrow money. Mortgage rates are now over 7% for a 30-year fix. And so the big question is, what will happen to mortgage rates in 2023? And what loan options are out there to help you purchase today if that's what you want to do? And in some cases, it may still make sense for you to purchase, especially when the other option is high rent prices. We're going to talk about a few options that you may have coming up.
I expect the interest rates to go up, which is going to have an indirect effect on the mortgage rates. What is your take on this?
I'm in an agreement. I mean, we can already see the impact that the increase in the rates have already had. And honestly, I think the next few months to the end of the year, it's going to be a rough patch, meaning it's going to be higher rates. I don't know how high. I don't even know if we'll see them actually get to 8%. I do think that once we get inflation under control, because the mortgage rates they're directly correlated with inflation. So as soon as we can figure out a way to get inflation under control, which by all means should start to happen the beginning part of next year, then we should see the mortgage rates follow, so that by late spring, we should have some more favorable interest rates. Now, how low will they go? I don't know. Could they get down to 5? That's what some forecasters think by the end of next year. So this time next year, we could see rates drop down quite a bit. But for now, until we get a handle on inflation, we're just going to continually see them go up a little bit more. And one of the things that has come out, guaranteed rate, Affinity offers it and some other lenders are doing it, is called a temporary 2-1 buydown. And what it is when you have a motivated seller and they're willing to pay concessions towards a buyer's closing costs, we can use those allowable closing costs specifically to fund a 2-1 buydown. So if today's interest rate is 7%, and that's what they qualify for, they are getting a 7% 30-year fixed rate, but we take some of the money that the seller has provided towards closing costs and we put it in an escrow account. So then for the first 12 months, the buyers get a little bit of payment relief, and their payments are based on 5%, 2% lower than their actual mortgage rate. And then the second year, it's based on 6%, 1% lower. So depending on the size of the loan, it can save them hundreds of dollars on that monthly payment, with the opportunity, if the interest rates come back down next year, as they're anticipating towards the end of the year, refinance completely, if it makes sense, into a permanently lower fixed rate mortgage. So that's one way to offset that. It's not an adjustable rate mortgage by any means. It's a true 30-year fixed rate. What we're doing is we're just using some of the seller concessions essentially to subsidize your mortgage payment for the first 2 years.
Let's walk through an example. Maybe use a home price of $500,000 or $550,000. What would this look like? And 20% down.
If it's a $550,000 house, you put 20% down. The loan amount that you would be looking to finance, $440,000. So in today's market at 7%, the principal and interest would be just over $2,900 a month. Now, if you were working with the seller and we took advantage of the 2-1 temporary buydown, the first year your payments would be based on 5%, which would lower that $2,900 to about $2,360. So about $565 less per month essentially would be paid by the seller for the first year. And then the second year at 6%, it would go a little higher to over $2,600. So saving about $360 a month, again, subsidized by that seller credit that we've collected at closing before it kicks into the first, the full 7%.
Okay, let's change gears a little bit and talk about the effects of Hurricane Ian. I've actually gotten quite a few calls already from potential buyers who've been displaced because of Hurricane Ian. Some of them have had insurance, and so they're waiting to get that payout. Some of them, unfortunately, have not had flood insurance, but they're wanting to stay in the area in Southwest Florida, but many do want to leave Fort Myers and the Naples area, and so they're actually looking to the Sarasota, Bradenton, Lakewood Ranch area. Do you have any opportunities for them to ease, the transition into purchasing a new home again?
Absolutely. FHA, which has been around for years, they have a program specifically for disaster relief. It's their 203H program. It's not new. It's specifically for disasters, and we've not had to really look into it in a number of years, but it essentially allows a borrower to qualify under, for the most part, normal FHA guidelines. But if they have lost their home in a federally declared disaster area, they have up to 1 full year from the date that it was declared a disaster to find a new primary home. And then there's steps when we go through the qualifying to exclude their current home that may have been completely destroyed that did have a mortgage on it to enable them to qualify for a new FHA loan with no money down, except for closing costs, unless the seller is willing to help and contribute with something like that. So it's a powerful loan. It does help for people to get back on their feet. They need a place to stay. They need safe shelter. So it's definitely worth looking into. We certainly offer that, but anybody that has any questions about purchasing a home when they're still in limbo, not knowing what's going to happen with their current home, with insurance, but they need a place to live, it's definitely worth looking at.
Now do me a favor, if you found value in this video, like this video, it does help out the channel. If you have any comments in terms of the real estate market here in Florida, is it going to crash? Is it not? Any comments in terms of homeowners insurance, mortgage rates, leave us a comment below so we can actually see what you're thinking and get other people's perspective. Thank you so much for tuning in today. I appreciate you watching my videos. Take care.